Hey, my name is Stephanie Lafergie, and this is your August market update. Today, we are going to get into it in terms of how rate cuts have affected the market in the news, inventory, what sales are doing, the neighborhoods that are experiencing the most amount of activity, and of course, stay tuned for my future predictions and expert advice. Don't forget to like and subscribe. It means the world to me when you watch my videos and you comment on things that you like or even things that you want to see more. I am not perfect. There's things that I miss. So if you want to see something else in these market updates, please don't hesitate to reach out and let me know. Let's jump right into some news articles that we saw in August and at the beginning of September to get a feel for what others are saying about the market. Here we have a news article saying people aren't buying homes in Kelowna despite lower mortgage interest rates. We saw a little spike in July, and that did not carry forward into August. So here we have a quote from our president at the Interior Real Estate Association, basically stating home sales were trending upwards at the end of July after the Bank of Canada did their rate reduction. That momentum did not continue into August. Here we have another news article along the same lines. Small interest rate cut won't move Kelowna real estate. Buyers have the advantage in Kelowna. I could not agree more. Buyers certainly have an advantage right now with such high inventory rates. There is so much for buyers to see, especially when it comes to condos. Our condominium listings are way up. Same with single family and townhouses. The inventory is through the roof right now, and there's tons of options for buyers. It's a great time to buy if you can handle the higher rates. Maybe wait 18 months until rates are suspected to come down. So what is this article saying? Essentially that for any significant movement in the Kelowna housing market to take place, the bank will have to do more than just a 25 basis cut. That's what buyers are waiting for. I think that's why they're really sitting on the sidelines. Additionally, the restriction on short-term rentals have had a large effect on the market, with properties, especially condos, being listed where they would have been used for vacation rentals in the past. Now, those owners are forced to sell, which again is creating an influx of inventory. It's pushed the market further into a buyer's market and away from a balanced market. So as you can see, the news is spewing that the market is slowing down. We had probably the slowest August since 2011. There has been a huge decrease in sales and inventory is continuing to climb. So that is telltale signs of being in a buyer's market. Let's look at some of the other market conditions like days on market and the average list price, just to get an idea of what is moving in the market today. So for a single family detached home, the average days on market, I would say, is probably around that 50 to 60 day mark. Now, if you're looking at the luxury property market, it is certainly much higher than that. And when you're looking at the price point that's from the $200,000 to $600,000 range, it's going to move a lot faster. The average median price for a single family home is around 1.1 million. What about the list price to sale ratio? Let's look at that for a second. On average, I would say homes are selling about 3% below their list price. And that actually applies to homes that have dropped in price, because we are seeing a lot of price reductions. Now, these statistics actually don't take that into account. So when you see a price reduction, it shows up as a new listing. And then typically, if it's in the right price range, it'll sell for about 3% below that. So these stats actually don't take into account those price reductions. I wish they did, because we would see way bigger drops in terms of the list price to sales ratio. As far as the number of sales that we saw for single family, it was fairly consistent over the summer. And as we saw in the news, we saw a huge drop in sales. Now, when we look at condos, we're actually seeing a greater variance than in these single family homes. We saw quite a few sales in May, and then it increased in July after the rate cut. And then we had quite a big drop in August. So the condos seem to be a little bit more sensitive to the rate cut, which makes sense because they're in a bit of a lower price range than single family, or at least there's more options in a lower price range. Those are those buyers that are wanting to get into the market and need to qualify for a mortgage. So it makes sense that we saw an increase in condo sales after that rate cut. Let's talk about some economic factors. As we discussed in the last market update, and will continue to be a factor for our busiest months, which is really the spring, early summer, short-term rentals. With the short-term rental new legislation that people aren't allowed to have Airbnbs unless it's their primary residence, we're seeing a lot more listings in those condos, and we're seeing a lot less tourism in Okanagan. Generally, people come here in the summer months, they stay, they realize just how much they love it, and then they want to pull the trigger to buy an investment property. They tell their friends about it. We just get more and more influx of visitors. And that's why Kelowna in the past has been one of the fastest growing cities. But these last 6 to 8 months, our economy has really taken a hit in Kelowna. Businesses aren't as busy, wineries aren't as busy, tourism is just down in general, and that is really affecting our economy, which I think is another part as to why sales are down. And when our economy is down, our debt also tends to increase. So with mortgages in general being high, mortgage renewals are coming up. Buyer's debt is also high from potentially still from COVID. So there's just a lot of factors that are coming into play in terms of the economy and how it's affecting the housing market. What we'll have to do is wait and see what happens with the US election, which is coming up in November, as that will also play a part in how the economy is going to affect our housing market in the coming months and for 2025. So that'll be interesting to see. And I look forward to sharing how that affects our market in the next few months. So let's just briefly go over some of these summer statistics. And I think after, just discussing what we've just discussed, a lot of this won't come as a huge surprise, but it's still interesting nonetheless. So when we look at the central Okanagan, we've seen a decrease in the number of sales. Same with the North Okanagan. Let's just scroll down. So here we have single family, prices are down. Benchmark price is around 1 million. Days to sell, like I said, is at around 57. And inventory is up 42% compared to last year. That is quite a jump. Townhome sales are down. Benchmark is around 723,000. Days to sell is 45, so a little less because price point is lower. And inventory is also up 40%. What about condos? Sales are down as well by 23%. Benchmark is around $500,000. Days to sell is 59, higher than townhomes. And inventory is up 48.5% compared to last year, which I think has a lot to do with that short-term rental legislation, and people are just liquidating their assets, and it's not a good investment for them anymore because they're not making money and they need to be able to support their mortgage. Let's look at some neighborhoods that are seeing a lot of activity. Glenmore saw 13 sales in the month of August, which is up 62.5% compared to last year. The Lower Mission also had quite a few sales, however, down from last year. So Glenmore being a more affordable area with the average benchmark price around $939,000 versus the Lower Mission being around 1.2. Lakeview Heights, also just from other research that I've been doing, is a neighborhood in West Kelowna. This has seen a lot of activity as well this year. Same amount of sales compared to last year, but the price has gone up due to popular demand. There's been a lot of activity in this neighborhood. So price has now jumped up 1.9%. So not a huge jump to 1178. West Kelowna price point is a little bit better. So that activity is up 22% and the price has also gone up, most likely due to demand. Smith Creek went from having no sales last year to having 4 sales this year. And West Kelowna Estates is another area that had no sales last year to having 8 sales this year. And in both those areas, prices have gone up due to popular demand. And those are areas that are more affordable compared to places like the Lower and Upper Mission in Kelowna, which are usually some of the most popular areas. Rutland has seen a decrease. So despite there being 11 sales, it's actually down in number compared to last year by 38%. And prices also come down, interestingly enough. I want to briefly talk about inventory and months of inventory. August showed we're at about 9 months of inventory. What does that mean? Well, if you've watched my previous videos, I explain that it's all about absorption rate when you determine whether you're in a buyer's market or a seller's market. Typically a seller's market, you're looking at 0 to 3 months of inventory. So for example, if 5 listings get sold per month and there's only 10 listings in that area, then you have about 2 months of inventory because it would only take 2 months for all those listings to come off the market. Hopefully that makes sense. We are in a buyer's market because there is currently at least 9 months of inventory. And actually going into September, we're at about 11 months of inventory and it's not even the end of the month. So we are entering more and more into a buyer's market as inventory goes up. Okay, so we've talked about general market trends that we've been seeing, market in the news, inventory, where sales are at, the activity in certain neighborhoods. And I feel like this has given you a fairly good idea of where the market is at right now. It is very clear that we are in a buyer's market. What can we expect moving forward? I feel as though we're caught in a bit of a cat and mouse game of whether interest rates will fall enough to improve affordability or if budget challenges across the table will keep a lid on demand to keep prices stable. It's important to know that the country's population grew by more than 430,000 during the third quarter of 2023, marking the fastest pace of population since any quarter since 1957. What are some things that could actually keep home prices down? Home prices in Canada are high in general, and it's compelling many buyers to hold off, as we're seeing, because we're seeing more and more listings come onto the market and nobody's pulling the trigger. Unless you're pricing aggressively and buyers see that good value. Those homes are moving quickly. Things like increasing household non-mortgage debt, higher qualifying stress test rates. That's essentially where we're at right now with interest rates, because you basically take your contract interest rate and add 2%, and that is your stress test rate. We're seeing higher city property taxes, this wave of renewal that's coming in the next 1 to 3 years. This will see homeowners paying more for their mortgage, less spending room for a new house, curbing those short-term rental property ownerships through restrictions and tax deterrence. This could release more primary housing, again, increasing the inventory that we already have. So with this huge population increase, all these new Canadians in our country, we need more homes. We're about 5 million homes short from where we need to be in 2030. And things that affect that pace are higher building costs, higher interest rates, restrictive government taxes and legislation, and fewer available laborers. It's hard to find workers in this economy as well. I know several people that if it wasn't for foreign or international workers, they don't know where they would find their people to help run their businesses. So where is a place where rate drops and home prices can coexist? It's not something you commonly hear, to be honest. And we saw that tiny little spike even in July when we had our rate cut in June. There were some buyers who immediately jumped and pulled the trigger, and we saw a little bump in activity in sales and a tiny bump in the benchmark price. But generally, as we see rate cuts, prices start to go up. However, we're in a unique situation. What could cause rate drops and prices to go down? So here are a few things that need to happen. So as rates drop, buyers still may have budget constraints, which will keep them out of the market for longer. They're unable to afford bidding wars, keeping a limit on local price increases. They'll buy a smaller house, a cheaper house. If more sellers suddenly and continually list without a corresponding surge in buyers, prices could decline as sellers look to unload their properties. So with all this information, I personally think that if you're in the market to make an investment or buy right now, knowing that there's going to be a huge demand in housing prices, I think a great investment would be a pre-sale, because we're going to see a shortage in construction. We're going to see a huge demand for new homes. There's certain benefits to purchasing a pre-sale and a new home as well. You save on property transfer tax, and you're also able to qualify for a 30-year amortization as a first-time home buyer. You get the 10-year warranty, so if there's anything wrong with your building, that's covered as well. And I think that we are going to see an increase in prices in the next couple years, despite high debt, despite inflation and cost of living consistently going up. I really do think we're going to continue to see that demand because there's such a demand for housing in this rapidly growing country. So that essentially wraps up my market update. If you are considering buying in the Kelowna or Vernon market and Lake Country as well, I would love to help you, or we just discuss the market. If you're just wanting to get your feet wet or considering buying and don't really know how to go about your next steps, we have a complete buyer's guide that we can share with you. So again, my name is Stephanie. I'm with the Move Okanagan Real Estate Group. I'm a realtor and a mortgage broker, and I would love to help you with your move, whether it's relocating or just wanting to learn more about other areas in the Okanagan. We're happy to help. Please don't forget to like and subscribe, and I'll see you guys next time.